Lined up for the first hour of the show. First up, Dilip Bhat of Prabhudas Lilladher will join us for some market talk. Next, we'll dissect the JP Associates' disappointing Q3 with Deepak Purswani of ICICI Direct. NASSCOM will release its FY15 guidance at 11:30 a.m. So all of the IT stocks will be in focus. Bhavin Shah of Equirus Securities and Harit Shah will be joining in from Nirmal Bang to take us through that. And later on the show, we also have the trade deficit data, which will be coming out. So that too will be watching. We will be watching out for that. But let's get to our first guest on the show then. Dilip Bhat, Joint MD of Prabhudas Lilladher, joins in this morning. Dilip, hi, good to see you in this morning. Well, it seems as though there is more stock-specific focus in the markets as opposed to any sort of movement on the Nifty. But what are the stocks that you'd possibly be looking at more keenly, or the sector that you'd be looking at more keenly, at least in the near term?
Well, I think overall the markets have been a lot more stock specific as what we have all seen. So I think going forward also, rather than confining to a particular sector, I think it will still be a few of the stocks. I think it will be still a combination of some of the frontline stocks, which possibly will be a little more defensive in nature and maybe can give a little proactive returns if the market really goes up, but also will provide the support. And I think a few of the mid caps also probably will merit a look from the current levels. So I think if you're asking for specific names, I think in the front line it will still be something like a Larsen & Toubro, which will still rank very high in the overall picks, because we still think that this is a stock which probably this company is the only one which has the balance sheet to take the any kind of serious big orders, and most of the competitors probably are a little stretched out or in a bad shape. So anybody who is thinking of any big orders probably will give it to Larsen & Toubro. So I think Larsen & Toubro will merit a look on an overall basis in the front line. And I think if I were to venture out a little more, I think Hero Motors possibly will look reasonably good from the current levels, and maybe even Bajaj Auto slightly at the lower levels. So that as far as the front line goes.
Dilip, what about the telecom space, particularly something like a Bharti and Idea? The way the auctions have panned out over the last, 7 days at least, are you getting a sense that if someone is even an investor in something like a Bharti and Idea and has a 1 or 2 year time horizon, it's, now the dynamics do not make sense for shareholders to stay invested in telecom stocks, given the way, how aggressive bidding has been?
Sure, I think you have certainly made a point over there. I think the aggressive bidding only confirms that the capital intensity of the business for most of these players is only going to increase. They are going to require more of capital. And I don't think that the ARPUs have really, though the bottoming out of ARPUs have really helped them much. So none of these companies will generate any kind of free cash flows for the next couple of years. So I think all ROEs and ROCs will remain quite muted in that sense. So I think that way these companies possibly will look a little more vulnerable. But one must say that something like a Bharati should be there in the portfolio to provide a defense to your portfolio, because on a risk return basis, the risk possibly is not too great in terms of the downside. Though in this case the upside is also not all that great, but it does provide the defense to your portfolio. But yes, this sector possibly will remain a little under shadow, largely led by the fears that most of the telecom companies will require capital to fund their expansions.
Dilip, what are you making of the flow picture at this point in time? Because Jan was a marginal negative of around 141 crores on the FII space, but Fed seems to be more aggressive, because we've done around 1700 crores in terms of current reckoning on outflows as well.
Well, I think Indian markets have been possibly very lucky with the generous flow of the FI money into India. And I think for the markets to go up, of course you require the FI support, because on the domestic front there are hardly any inflows at the moment, though the outflows may have stopped, and there is some hope that maybe over the next couple of months the inflows in the domestic front may improve. So I think this negative FI flow will make the markets vulnerable because if there is some serious selling which continues even after the Fed tapering off increases, I think that will make the markets vulnerable. So in that sense, it makes us do feel that this kind of tepid or very muted FII flow can possibly upset the markets maybe in the short run. But in the long run, I think it will still be a matter of how much people really take a call that probably India has bottomed out and there's a good growth story in the next couple of years.
Has Tata Motors stock price and the up move that we've seen over the last 7 days priced in the good news from the earnings? And is it a buy at current levels?
Sure, I think Tata Motors is a stock which probably still is within the reasonable valuation zone. And I think the positive surprise on the EBITDA margin on JLR is something which is really very good for the stock. So I think, of course, the stock price has moved up, but we still think that even from the current levels, on a risk-return basis, the risk is probably limited, but on the upside, we can still expect at least 20-22% return from Tata Motors from the current levels.
Okay, Dilip, SBI is still to report its numbers and it's coming out on the opportune day of Valentine's Day. Do you have any expectations on SBI this quarter, and would you play for it pre-numbers?
Well, I think as far as SBI is concerned, probably one can say in terms of the NPA provisioning, probably the worst certainly seems to be behind us. But the main question that will still come under close scrutiny is that the core business, the NI growth, the credit growth, which all remains pretty muted for the entire industry, is going to be no different for SBI. And in that sense, I think the core performance will still lack the luster for it to really get a good amount of tailwind in terms of investment support. Of course, this the fresh raising of capital has given a good support to their tier 1 capital. So it makes them a lot more comfortable maybe for next 1.5 years or 2 years in terms of the credit growth. But I think overall probably you can still see that this particular stock may not come down. Gradually, if the macro environment improves, I think the stock can go up. Otherwise, it will just probably move sideways.
Okay, Dilip, thanks so much for taking the time out and joining us. Remember, for more on this story or for any other big business and economy related development reported on CNBC TV18, you can log on to moneycontrol.com and get the details there. On that note, it's time for a very short break, but we'll come back and get stock specific. So